Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast. I'm one of your hosts, AJ Wheeler, and with me as always is Mark Pallardy.
Hey everyone.
Got a great show for you. We start off by talking about reforming 501c4 organizations. So what's a C4? How is it different from a C3? Spoiler alert, it's about political stuff, or at least funding for campaigns and local and national kind of candidates and issues. So we'll talk about that and the author's suggestion on how to reform that, how to make it, I guess, better. So we'll talk about that in the podcast. And then article on big changes and 7 big questions for big philanthropy. What's happened in the last few years? What are the things that donors and organizations need to be thinking about, kind of questioning and coming to reckoning with? There's 7 of them. We'll go through it. It's a deep article. I think we could probably do 7 podcasts alone on each one of the questions there, but we'll wade into it and give our opinion on it. And then what does philanthropy sound like? Part 1, learning from donors of color. Kind of an interesting conversation about what you can learn from donors of color, how your organization can think about it, how you can kind of plan around it, and how diversity really makes a difference in your organization and in philanthropy in general. And then our topic of the week is QuickBooks a worthwhile investment for a small nonprofit with a financial idiot from it as an ED. Well, we don't call the guy an idiot, but he or she calls himself an idiot. But we'll talk about why a good accounting system is vital for a nonprofit at a certain level, what your options are, what our opinions are on QuickBooks and all that. But all that on this episode. But Mark, you have our first article for us. Take it away.
Yeah, AJ, thanks. So we're going to actually start with a little bit of a meteor article. This one is from Craig Kennedy. He wrote one of the articles we did in a recent show. Really like his writing style. And it's about reforming 501c4 organizations. So to get you caught up to speed, for those who might not know what a 501c4 is versus a 501c3, a 501c4 is a social welfare organization, but they basically are allowed to have more election and lobbying activities than a normal 501c3 public charity would. So as a 501c3, you're really not supposed to be doing much electioneering, and there's a tight limits on how much you can do. But a 501c4 is a lot more wide open. The differences between the two are that if you make donations to a 501c4, like if I write a check out to a 501c4, it's not tax deductible. But yet there are a lot of loopholes for 501c4s that this author explains, and then he gives a couple suggestions at the end as to how you can reform it. So let's say you have your normal 501c3 charity, and you want to be giving to, basically this is for wealthy donors, right? If they want to be giving to some form of political action committee, or they want to support a candidate who, not a candidate directly, but something, an organization, a social welfare thing that is either to the right or to the left, or some political leaning that they're interested in, they can't donate money directly to them, but they can donate stock and capital assets and then not have to pay capital gains on that. So that's issue number 1, because effectively, wealthy donors who have this kind of money, if they do it that way, it's still disclosed, but it can be a way to avoid capital gains. Another way, though, that people have found getting around this is that they can give money to a 501c3 or to a foundation, or even to our favorite donor advised funds, and then those organizations can give to the 501c4s, which is what is happening in large part, because those organizations don't need a charitable write-off, right? They're already the charity who, kind of is on the tail end of that. So by kind of having this middleman, and then the 501c3 is giving away to the 501c4, they're not giving directly to political action committee. It's almost like laundering money through a 501c3, while these wealthy donors can still get their tax refunds. And in the case of donor advised funds or foundations, they can even be in the controlling interest up to the very point where it's given to the 501c4. So this author kind of points out things that are starting to change in that arena, and there was a couple cases in here, and we'll link to the articles, of course, as usual, but there's a couple cases of wealthy donors who kind of used this loophole, and it was brought to the attention of the IRS and Congress people, and they're like, yeah, we got to make some of these changes. So in addition to some of the lightweight changes they're making, this author suggests that what we want to potentially do, or what he suggests doing, is to either have all donations to 501c4s be in cash, right? So that you can't do the stock appreciation trick, and actually preclude contributions from private foundations, donor advised funds, and other C3 groups to 501c4s. And that would make it more transparent. So you can still give to them, you can still give to these social welfare organizations, but you really shouldn't be getting the tax benefits of that, because that was the way it was intended when they were created. But like everything else in the tax system, it's so complicated, everybody can find a loophole. So I found this interesting. I didn't really know much about 501c4s, and how the inner workings of them. So I think, shining a light on these things is kind of the first step to making changes. And I kind of agree with his assessment. AJ, I'm curious what you thought when you read this.
Yeah, I thought it was enlightening too. So I've only worked with a handful of C4s in my career. They're not like super common. But I got to be honest, I wasn't even aware of the big differences between them. Like in any of the 501c3s that I worked with, like it's not like, and Mark kind of alluded to this, it's not like any kind of political activity is off limits. There's just like really stiff guide rails about what you can do. And often internally, or like in the 501c3 world, it's called like grassroots efforts. So like spreading awareness around an issue, a ballot, a measure, or something like that. But you can't come out and directly support one candidate, but you can educate candidates on issues, but you have to offer that information to all candidates. So it's a very kind of, like for a C3, it's not really a gray area, but there's some good guide rails there on what you can and can't do. Whereas the C4, it's kind of wide open on how you can, kind of politically wrangle these things, including making direct ads attacking or promoting a certain candidate in the area or on an issue. So it's like very interesting to me as I was doing research on this, kind of like, kind of looking at what this gentleman said in his article versus, kind of like almost like a checklist of what a C3 can do for political political involvement, and what a C4 can do. And I got to say, he comes up with some really good ideas on how to curb this, because he acknowledges in the article that, any of the things that would be major changes are like either political suicide or just would never happen, and so this idea of kind of addressing the investment portion by, offering only cash only donations and not having this stock trip or appreciated asset kind of transfer to these could be a really good, I think, addition. And I think something that has the possibility of changing. But I think for our audience, I would say that, a lot of our audience probably is a smaller nonprofit, and they probably have, not a partisan view, but at least like an organizational view on a lot of ballot measures, that happen, or candidates that happen that would either support their kind of cause and mission, or vice versa, be against that cause or mission. So I think having if you're a C3, if you're a C3 and you want to, I guess, educate and get into anything that's known as like grassroots kind of political organization, or a grassroots like organizing, you need to present what you're trying to do to the board, preferably to like if you have an auditor is a good place to turn to understand, hey, am I still in the guidelines of my C3? If I do this, if I support or I'm educating on a ballot measure or something like that, is that correct? I used to actually work with a C3 that they did environmental law. Essentially, they would actually sue companies and things to enforce EPA regulations. And it was a real chess match to understand if you were politically wrangling here or, and they did grassroots. And what they ended up doing was starting a C4, a sister organization, a C4 that was able to do more of the political campaigning and more of that. So I don't necessarily want to paint C4s as all bad. I think, people, very smart people with lots of money and lots of lawyers have figured out kind of this way around what a C4 is actually meant to do. But there are a lot of C4s that do very, noble things in their pursuit of a nonprofit mission. And a lot of them are usually attached to a C3 that do that. So I would say, like, I definitely don't want to, I think there's a lot of C4s out there that do some good, but I think, like this, especially the kind of changes he's mentioning in the article would be good ones, I think, and kind of level the playing field as far as it goes.
Yeah, and I just want to mention one other thing that he makes a point of, he's not trying to inhibit free speech, right? But he's just saying when you're giving money in these kind of surreptitious ways to the C4, what you're effectively doing is using taxpayer money to fund these organizations, right? Because that wealthy donor who all of a sudden gets a tax break for taxes that they would have otherwise paid by funneling money through these political action committees or whatever use they are, good, bad, or otherwise, makes it really feel, kind of brings to light like, well, now I'm funding causes that I don't believe in, I guess, welcome to the USA, right? But it just doesn't feel right. It's like, if I want to give to a charitable organization that has a public service, by all means, I should get a tax break on that. And that should continue to go. But once it gets into political speech, that's tricky. That's a slippery slope. And I kind of see the impetus for what he's doing here. So, AJ, I think you got our next article for us.
Yeah. So this actually comes our way of Center for Effective Philanthropy, and it's written by Phil Buckman, and it's big changes and 7 big questions for big philanthropy. So what this article is addressing is there was kind of a self-reflection back in 2019, if anybody can remember back that far before, pandemic and back when the world was semi-normal. They did kind of a self-critique that kind of brought about a lot of, kind of self-reflection in the large philanthropy area. But then what's happened since 2019 is there's been some big changes in the landscape of, like racial justice, everything that happened with COVID. And so essentially this article kind of presents, hey, let's go ahead and do a self-critique again. And it's asking some pretty vital questions here, I think. So we'll go through the questions and then kind of like I'll give my perspective on them, and then Mark can kind of, I'm sure he's got something to say about this too. So, but first question is, will the changes in how foundations and donors support nonprofits be sustained and implemented thoughtfully? So the big thing is with the flood of kind of like extra cash or disposable income that happened over the last 2 years, either through, increased sales through the pandemic or PPP loans or anything else that happened where people had a little bit more, in direct handouts, people had a little bit more disposable income. And there was a lot of key philanthropy that happened during those last 2 years to support like small businesses, nonprofits, all that kind of thing. And what they're kind of afraid of is that, like the emphasis on nonprofit accountability has kind of faded, and then kind of has rolled into trust, and we just kind of put our money into where it is. So they talk about kind of, how they can reflect on that and kind of change and kind of shift that. So, and especially around like big gifts that they're talking about, large grants. So the second question is, will racial equality be prioritized, or will there be a orchestrated backlash and complementary pushback down on the priority list? So this is kind of like a recency bias they talk about in sports, where I think this was on the forefront of everybody's mind over the last 2 years or so. But is it like fashion where this is going to go out of trend, or will we see that they'll continue to be on the forefront of diversity, equity, and inclusion, or are we seeing kind of a pushback against that? So and I think kind of navigating that water is going to be something that I think large and small organizations need to keep clear. So so I guess kind of understanding like that process that everybody went through, I think, over the last 2 years, and trust me, a lot of nonprofits were doing it long before that. Continuing to make strides in those areas, I think, is something important and something that needs to be on the forefront of nonprofit organizations' kind of list of things they'd like to see done. The third one is, will philanthropy step up on climate change? Again, another, I think, not hot button issue, but something that's at the forefront, especially over the last even 5 years. I mean, granted, climate change has been on everybody's lips since the 80s, I think, but has really kind of picked up steam over the last couple of years. Even like the Rockefeller Foundation, which the foundation is around because of an oil baron, that it's going to make the Rockefeller's recent announcement that they're going to focus grant making on climate change and divest from fossil fuels is a pretty big thing. I mean, the Rockefeller Foundation is huge, and if they're pulling their money out of fossil fuels, it's kind of a signaling that, hey, or it could be like a greenwash on the part of the Rockefeller Foundation. We made our money in coal and oil, and now we can reap the benefits. We won't invest in that anymore. But I think talking about how your organization is engaged, even if you're outside of that climate change or environmental realm of nonprofits, how can you be a part of the solution, and if there's money available for you to do so? And then how philanthropy will balance the needs to counter-polarize with the need to call out extremism. So they're talking about bringing people together more, but not necessarily the extreme left and rights on this, and how to overcome that toxic polarization that's happening. So I think it's an interesting kind of thing. And there's actually a quote here that I really like: a return to civility at the cost of truth-telling escapes me. I don't long for some fantastical time when back rooms, women, and whiskey, but there has never been a time when we got a seat at the self-determination table by being sweet and docile. So it's kind of a push-pull, I think, in being inclusive and having everybody at the table, but not having, extremes on either side run your organization. And we've done an article before about how that can really grind a nonprofit's mission to a halt if you have really extreme activist types in the organization. So it's how to bring everybody together and leverage that more. And if the question of addressing, disparities, bringing in a larger audience to be able to see that. And then 5 is, can philanthropy best act to protect our democracy? So they're talking about, can philanthropy make a difference in democracy and the democratic institutions, with all kinds of big issues embedded in this question, like gerrymandering, officials, like candidates, Supreme Court, all that kind of stuff. But is that something that philanthropy, even big philanthropy, is going to take steps in to address those kind of things, those crucial issues, either here or abroad? And then, are we headed into a recession? What is the effect of a more turbulent market have for investors, as well as continued high inflation have on donations, funding, granting, and all of that? So I think it's something that all organizations should think about, not just big philanthropy, is how you plan out your giving in the next few years, given that if we're headed into a recession, or if we continue with high inflation and people have less discretionary funds to make, and how can large philanthropy step up to fill that gap? And then a related question is how household rates of giving to nonprofits continue to taper off. Will that continue? How does that affect the perceptions of legitimacy of nonprofit and philanthropy? And will it translate to legislative change in how people give or how they're rewarded either through the tax code or through other means to, encourage more individual giving and not just have nonprofits funded by governmental arms, either state or local or federal, or just large foundations who often have, an aim at who they're funding and how they're funding, where individuals, when you donate individually to the causes that you care about and how they can, how nonprofits, donor advised funds, and other individual giving will, incentivize that and make it easier for people to do so. And in small and large amounts, I think it's important. So, Mark, I thought the article was really interesting. There's a lot of meat there. We'll link it in the description, but love to hear your take on some of this.
Yeah, I think this is like any one of these questions, right? We could probably do a whole podcast on, because there's so much to think about with the future of nonprofits. And, a lot of these things that were brought up, the questions are social issues, and it's kind of painting a picture of what is philanthropy's place going to be in some of these social issues, climate change, racial equity questions, other big picture questions. One of the things we've talked about on the podcast before, which came to mind when I was reading this, is it's almost not even compatible with a nonprofit to just sit on the sidelines anymore and not take a stand. Because I remember during the Black Lives Matter protests and all that was happening, nonprofits were being called out for staying on the sidelines and for being silent. And there's almost a silence equals complicity in some people's minds. So the polarization, I don't see it changing anytime soon. I don't know that it's going to change through the lens of philanthropy. And I actually think, people are going to pony up with whatever their political beliefs are and side with nonprofits who agree or disagree with their point of view as well. So, maybe I'm just being pessimistic about it, but I don't see how nonprofits can remain Switzerland. Regarding the kind of giving on a household level versus giving on a foundational level, I personally think a lot of this changed when Trump made the changes to the tax law and increased the standard deduction and made it much harder to file a Schedule A for your normal average wage workers, right? So everybody's taking that standard deduction and they're not all of a sudden itemizing their charitable giving. Now, charitable giving, we all love to think that it's an altruistic thing, but actually having that deduction and being able to file a Schedule A, I think did impact some people. And I think this is why we're kind of seeing the rise of the donor advised funds. And the donor advised funds, it's a slippery slope, right? It's like we just saw from our last article. They can be used for good and they can also be used for nefarious purposes. And one of the things we have talked about numerous times on the podcast is the fact that it's not that donor advised funds, when used just kind of to sock away money so that you can get the tax deduction, but yet if the money is just sitting there and appreciating but not getting out to the nonprofits, which there really are no requirements to do, and which the brokers don't have an incentive to get money out of their system, we sit there and we look at these donor advised funds and we realize they're just accumulating money. And on the other side of that, the nonprofits are sitting there seeing their donations go down because this is the vehicle some people are using, so they get the extra benefit of having, that kind of tax leverage. So, there's things, it's kind of policy wonky stuff to talk about, but there are things that probably need to change on the tax code side to fix some of these issues. And, I think the future is going to involve nonprofits in these political spaces, because nonprofits sometimes are at the forefront of helping and being there on the front lines, regardless of what the cause is. So, they are supposed to be social benefit, social welfare organizations, and social benefit sometimes comes with some pain. So maybe my view is a little more pessimistic than AJ's, but
Well,
that's kind of where I'm at.
yeah, I have to disagree a little bit, Mark. I think, like when you were saying that kind of, I think it's hard for an organization or a nonprofit to sit on the sideline. I would say, I don't know if it's the right term, but staying in your lane. If you're an environmental organization, you know what I mean. Of course, show that you have a commitment to diversity in that of thought and leadership in your organization. But whether or not you're commenting on social justice issues or anything like that may be secondary to the mission. And if you spread yourself too thin in those areas, you can find your you can find your organization playing whack-a-mole with things that you're supporting and things that you're putting out, and drift further from your original mission and kind of like who you're supporting. So I think it's important.
And really alienate donors, right? If they believe in one part that you're
Sure.
following and not another, right?
That's unrelated to the mission that you're doing. So, I mean, I think the famous, like Michael Jordan kind of, when he was being, behooved to support a candidate, his famous quote was, well, Republicans buy shoes too. And so, kind of thinking if you have a diverse set of donors and you make a really political stance one way or the other, you run the risk of losing some support there. So, balancing that these days is much more difficult than it was, say, even back in like, the early 2010s, to understand, or even, before 2019. So I think just understanding, refocusing on what the mission of the organization is and how you can support that, and then being able to find support from, all different areas that you're supporting, but also understand that there's important work on the other side of that internally. And if anybody ever asks, you can point to the things that your organization does to support those things that somebody may be interested in. So I would say, it's can be a slippery slope if you just decide to take on, one side or the other on these kind of like hot button political takes, or, like inequities that we see. If it's not your organization's kind of main mission, you can find yourself chasing sub missions or sub kind of like pet projects, and the real reason the organization is there and the social benefit or the public well-being of why the nonprofit is around can be lost, I think, a bit. So, Mark, do you have our next article?
I do. Yeah, I mean, just a lot of heady thoughts going around. I think one of the questions that was asked in that previous article, which I think this next article kind of expands upon, is the question of racial equity, and we do like to give those articles voice sometimes. So this is also from the Center of Effective Philanthropy by Isabel Layton, and it's called "What Does Philanthropy Sound Like? Learning from Donors of Color." So there is a network called the Donors of Color Network. And they've done some surveying of a lot of different high wealth donors of color to ask them what can be done in that space to make them more effective. And the overarching picture is to focus on the relationship with other donors and with the organization, rather than focus on the transactions, right? If we think about philanthropy, we're thinking about money or a building that's being built, or grant checks, or sitting in the boardroom, whereas the board, the Donors of Color Network, have found that the more grassroots connection with other donors, connection with other people giving who are of a like mind, or maybe other people of color, really helps to benefit. So their research came up with the following solutions that they think the philanthropic sector should seek to do. One is to nourish peer-to-peer programming. So while high value donors who are giving a lot of money might be connected with other high value organizations, they're not necessarily connected with other donors in the same way. They're not connected with their peers who are also high value, who are giving to different organizations. So creating some sort of networking between them so that they can spread around this money in a more I don't know, generous way to people who organizations they may not have heard of, I guess, is the way there. And examining the high donors relationship with the wealth gap, right? Because there is a sense that for a lot of these high donors, they may be coming from neighborhoods or, parts of town that are less affluent, and the communities that they came from have remained poor. So there truly is some guilt around that. And therefore, they may be given in silence and not very connected with their neighborhood. And so they're suggesting just to examine what your relationship is with that wealth gap. Putting their money where the movement is. So they want to align the money with the goals of the leadership in that movement. Find out where the money is needed. Fund longer grant cycles and general operating expenses. This one I love, right? This one I think is pivotal, not just for donors of color, but for all networks, because there are often times where you're getting a restricted grant or some money from a foundation, and you need to spend that money in X amount of time. And sometimes there's a longer tail on some of these projects, and finding a way to fund longer cycles so that you're not having to, prove your worth immediately, right? Like give it a 3-year cycle instead of a 1-year cycle or a 6-month cycle to get a project up and running. I think that can be important for everyone. Lead with people of color, right? Go and find people of color who are leading organizations, and figure out how they are functioning well and how you can support them. Using resource infrastructure to build critical capacities, right? So we all want a seat at the table, and when you in order to get a seat at the table, at least the way the table is constructed currently, is to use infrastructure, right? That's policies and advocacy and funding and communications and organizing and building networks in that way, so that this donors of color network functions in a way where the entire philanthropy organizations run. And then finally, nurture donor education to redefine the status quo. So, the way it's working now is not necessarily working for everybody. So just redefining and re-educating some of these donors to understand what the systems are currently as they are at, and what we're moving toward in the future. So I think these are important steps. And in questions of equity, racial equity, it might not always come to a Black Lives Matter march on the street. It might be figuring out some of these systems and figuring out how donors of color can use these networks amongst themselves. I understand for those of you watching the YouTube, we're two white guys talking about this, but I think it's important for us to shed light on it and to see that these conversations are happening. And if you happen to be somebody who's listening to this who resonates with this, seek out the Donors of Color Network and see how you can help and you can assist in this. So, AJ, any thoughts on this one?
Yeah, I think they're all good kind of bullet point, kind of things to think about. And I think it goes beyond just thinking about, kind of a diversity or the donor of color network. I think a lot of these, if you even just remove the kind of donor of color network or person of color kind of aspect from it, are really good things to think about when you're thinking about how money's coming into your organization or how you're going to give money to an organization. I think, putting your money where the movement is. What do you want to see changed, and how do you want to affect that? And being able to, as an organization, think about that on a regular basis, maybe once a year, to make sure that your organization is moving in the right direction and you're supporting causes and programs and the affected community that you're serving correctly, and making sure that the help is getting to the people that most need it. And I think that's awesome. And, to pony off the bullet point that really resonated with you, funding longer grant cycles and general operating expenses, having a multi-year grant or a multi-year support really allows a program and delivery of services to blossom. You learn things from the first year and you're able to implement better things. And a good, funder, I'm not even going to say grantor, but a funder and organizational relationship where you can work on that together and, tweak and kind of massage 2 and 3 year, funding, second and third year funding really helps, and having general operating expenses covered through a grant of some type. I mean, we've seen a lot more of that, or at least I've seen a lot more of that, especially in, supports that are support around, houseless people, or mental health spaces where they are funding more general operating expenses, instead of just 10% of your program expenses. So I think those are really good, to think about, regardless if it's in this realm of thinking about donors of color, or serving a community of color. And then I think having just a diverse staff. I mean, oftentimes we can get, group think, having different, diversity of thought and diversity of backgrounds in an organization is only going to benefit you. I think, to have a different way of looking at something, or a different plan, or, an idea of somebody else's experience can really, I think, benefit any organization. So I just think being able to describe to your donors and to your participant, or the people you're serving, what the mission is and how to overcome kind of just becoming stagnant in your program delivery, I think is excellent, and it leads to more funds, I think. So really good article, I thought. The only thing I could say is, there is some talk of activism or activists in there, and I'll just refer back to our article before, how to tread lightly, I guess, when you're hiring somebody that has extreme, having somebody in the organization that maybe has extreme beliefs or extreme kind of partisanship on either side, how to manage that in an organization, I think was an interesting article. And it's something I think about when I read these now, is how the wants and needs of an organization needs to be tempered with being able to even just run an organization correctly and have it functioning and firing on all cylinders, I think is really important.
All right, great. I think, AJ, let's get to our question of the week.
Sure. So this one comes in, thought this was interesting. An interesting question, because I can tell this is from a small nonprofit that kind of needs some direction here. Is QuickBooks a worthwhile investment for my small nonprofit with a financial idiot for an executive director? Note, it's the executive director that's writing the question. So he's calling himself out. He or she is calling himself out as a financial idiot. But essentially right now, what they're doing is they're using an Excel check register and keeping kind of a cash set of books of revenue, or donations and expenses, and their primary grant manager, who deals with the budgets around their grants, wants an easier way of keeping the books, and they're wondering, is QuickBooks going to ease or add to my pain if they implement it at the urging of the contract accountant and primary grant writer and manager. So they want to know, is it a worthwhile investment in QuickBooks? I think this is probably a pretty easy question for us to answer, but we can probably get into some specifics. But Mark, I'll let you take this softball of a question that came into the show.
Yeah, QuickBooks is a complicated thing, right? If you've listened to past episodes, I have a love-hate relationship with QuickBooks. I happen to be a QuickBooks Pro advisor, or have been in the past. So I understand the complexity and the richness that QuickBooks can offer, but it is also one size fits all kind of a program. They like to say they're very malleable and customizable, but that has limits on it as well. My personal suggestion for the author, the executive director here, is you didn't really state if your accountant and grant manager want a QuickBooks Online or a QuickBooks Desktop product. I think you should probably explore TechSoup, which we've talked about a number of times on the podcast, which is a service that offers up 501c3s software at a significantly discounted price. I know they frequently have QuickBooks products on there. And you might just start off with a desktop product, so that, once you kind of jump into the world of QuickBooks Online, then you're paying a monthly service basically for life, right? So if you set something up in QuickBooks Desktop, and you like the way it flows, and you can see more people external from your organization needing access to your accounting, then you can always transfer that over into QuickBooks Online. You can't really do the opposite. You can't go from QuickBooks Online to desktop because, it's kind of like the drug dealer. Once they get you hooked, they're not going to let you go back to the free stuff, right? So, you can pretty cheaply get a QuickBooks desktop subscription that'll, even though they come out with new subscriptions every year, I know many a client that 3, 4, 5 years on, they're still using the same version of QuickBooks. So it doesn't sound like there's a lot of complexity that needs to happen. So I don't know, even jumping into the $15 a month tier on QuickBooks Online is necessary. And often you can get the reports that an accountant needs right out of QuickBooks Desktop. So I would say one thing before I turn it over to AJ, because, it's my public service announcement. Friends don't let friends use QuickBooks Online payroll. Don't ever do it. Just trust me on that.
QuickBooks payroll, period,
yeah,
right?
Intuitive QuickBooks payroll is a hot mess. Not even hot. It's just a mess. So, AJ, with that caveat, I'll throw it over to you.
So, but if anybody's listening from Intuit and wants to sponsor the podcast, we would love to say glowing things about your accounting platform. But
you're such a shill.
Call me shell up.
I'll say neutral things. I don't know that I could go glowing. Nobody would believe me. All right.
But I think the thing to note here is QuickBooks is just a tool, and it's a tool for, the bookkeeping or the financial records of an organization. And there's many other alternatives. There's, Xero, Aplos is a accounting program that's specialized for fund accounting. I mean, there's a lot of options out there. QuickBooks is not the only show in town. So I would say, like looking at your options there, the reason why a lot of people, and Mark kind of alluded to it, that use QuickBooks especially QuickBooks Online, is you can get it you can get a really robust version of it for like $75 through TechSoup a year, I think is what it goes for. And it's quite the deal. I mean, you're getting something that would usually cost $50-$60 a month for $75 a year. So it's quite a deep discount. But I would say that, like Mark's kind of suggestion about the desktop, spoiler alert, desktop is moving to a monthly subscription plan. So Intuit is pushing.
Oh, no, say it ain't so, AJ.
Oh, it's coming. So I'm just saying, eventually it's going to be all the same. You're going to have to pay a monthly service fee for this. The days of having a desktop version of some kind of accounting system that you can buy once and use for a couple of 3 years to save a few bucks, it's going away. And I think the benefit of QuickBooks Online or any online cloud accounting system is that you can access it from anywhere. You don't have to carry around a specific computer to get this stuff done. So I'm a big fan of cloud, kind of accounting system, just because of the ease of access. Look, they all do the same thing. It's all debits and credits and some kind of like interface that you can, make it easier for people to manage, an AR and AP system. But at the end of the day, they all spit out the same thing. And QuickBooks tries to say that it's, industry specific, but what they really mean by that is they just change the name of the reports and the names of like what revenue is. So like in the nonprofit, it's, pledges, but it's all the same thing. I mean, it just has a different name on it. It's dressed up in different window dressing. So, at the end of the day, you could get the base thing of QuickBooks and run, a nonprofit through it. And okay, so your pledges are called grants and pledges are called sales. I mean, it's revenue. Like it's not, they're expenses, not expenditures. Oof, man, what a departure, like it's a balance sheet, not a statement of financial position. Oh my gosh, I'm going to lose my mind over here. But at the end of the day, it's just a tool. And I would say the question points out that they have grants, and I would say that, and budgets. And I would say that QuickBooks doesn't make it easy to track individual grants through the, budgets, I guess, grant budgets by class if you're using that kind of setup. And this may be a little too much inside baseball for this question, but essentially tracking grants in QuickBooks, the actual expenses is pretty simple. Setting up a budget that you can press a button and run, a budget to actual for each individual grant is much more labor intensive, I guess I would say. So I think doing some research. Your contract accountant should be able to give you if they're worth their salt, they should be able to give you the pros and cons of jumping on to QuickBooks, and they should be able to educate you on how you can get in there with read only, so you can't screw anything up, and look at like reports and pull things and review what's receivable, what's been received, and how the organization is the financial help of the organization you can investigate at your leisure, I think, would be the thing that I would want. And I would think that, producing reports that you can, make action on, and be able to look at the financial health of your organization is going to be much easier. There's less room for mistakes than if you're entering essentially a check register and maintaining grant funding through an Excel sheet. Although if you're a very small organization, that is a way to go. But if you have multiple grants or multiple programs, it's time for you to get onto an accounting system that can support that and be able to run reports from and be able to report from. So I think, yeah, it sounds like you need an
and if
system.
you have more than one person doing the books too, QuickBooks offers audit trails, right? So you can see who did what when, so that if you have any issues that come up later, even if since you kind of, treat yourself as an idiot, I'm not calling you that, but if you deleted something, there will at least be an audit trail, so that things are fixable later on.
Yeah, no, totally agree. I think having, and it not just QuickBooks, any kind of accounting system, being able to know who did what, is vital. And any of these programs, you can lock down or assign kind of roles to who's doing what. So if you have somebody that just deals with AP, they can't monkey around and, with receipts of revenue or anything like that. Or, you can customize what they can see and what they can't see, and how they interact with that accounting system that can help your control system here, and really make it kind of the accounting records very siloed on what somebody can do and how much leeway they have in the accounting system to either make it fraudulent or screw things up where it's going to take time to fix. So I think all of that's important. And I think understanding that QuickBooks is not the only game in town, although it's usually the cheapest and most well-known, there's other options out there, especially for nonprofits, I should say, the least expensive version because it's connection with TechSoup if you're a 501c3.
Yeah, the one thing I would add to this though is if you're deciding to go this route, regardless of what program it is, try to get an accountant or somebody who understands this to help you set it up, because they will have these, tutorials that walk you through setting up a chart of accounts and all this sort of stuff. And, you might be making decisions that you don't understand. You might be setting things up in a way that is not going to serve you later on, and then ends up costing more time and energy to fix it later. So, even if it's simple, just hiring somebody to help you for an hour or two to just kind of get you up and running so that you understand where the processes are. There's lots of people out there who understand not only QuickBooks, but all sorts of other accounting programs. So, use the expertise. It might cost you a little bit up front, but it's going to probably save you over time. All right. So, I think that wraps us up for another episode of the podcast. We certainly appreciate you being here and engaging with us. We always enjoy your feedback. Of course, you can tweet at us at oh my God, easy for me to say, at Profitless Pod on Twitter, or you can comment down in the YouTube. On behalf of AJ and myself, thank you so much for joining us, and we'll see you on the next episode.
Thanks, everybody.